Hello, everybody. Thank you so much for joining us today. We welcome you all to today's learning. I am CA Kriti Chadda, partner GSA and Associates LLP. Over the next 2 hours, we will be talking about the key techniques for reigniting passion for the risk-based audit of financial statements. Today, we are very excited to have with us our speaker, sir, CA Vidhyadhar Kulkarni, sir, who's a former principal consultant to NFRA. He's a chartered accountant from India with 39 years of experience in the area of regulations, financial reporting, consulting, and banking in India and overseas. His exposure to wide variety of areas like IFRS, financial controls and assurance, and Basel II. He has been a strong advocate of embracing global best practices and emerging economies, taking a proactive leadership role in global initiatives forums. He's an active supporter of reform initiatives of regulators, industry bodies, and learning centers of excellence, and has been member of various working groups and guest faculty at learning and knowledge centers in India. He believes in cordial coexistence of three pillars of the society, that is, the small, medium, and large size entities, and the professionals. He was a member of following working groups and study groups: the Reserve Bank of India and Indian Bank Association, Working Group on IFRS Implementation, the Institute of Chartered Accountants of India, subgroup study groups on IFRS 9, IFRS 8, ASB subgroups to study need for more than one set of AS. IBA Working Group on Basel II and Loss Data Consortium Initiative. We are thankful and grateful that Kulkarni sir has joined us today. But before we get started, there are just a couple of things we would like to share before so that we may get the best of the webinar. We'll be happy to answer all questions as we go along, but all participants would please post them in the chat box only at the bottom of the screen. There will also be a Q&A session at the end so that the entire meeting can be conducted with the exact learning to be in place. And to me, I would say that audit is the most important in my life because it defines our professional purpose, legal duty, and value. So I would request my senior partner, Dr. C. Amarji Chopra sir, to please introduce and guide us through the topic to start today's learning.
Thank you, Kriti. And thanks in particular to Vidhyadharji for making himself available today evening for this very important topic. You see, for the benefit of everyone, one would like to say that at least I am a chartered accountant of an era when the audit was conducted in a very different manner. When we were sent for the audit, the senior would tell us that what you need to do is that first month full vouching, last month full vouching, so that you can actually settle for the cut-off procedures in full. And during the year, for the remaining 10 months, you can pick up any 7 days, basically, for every month, or maybe 3 days or 4 days or 5 days in every month for the vouching purposes. And of course, the scrutiny of the levy used to take place as it takes place even now, for that matter. So the vouching used to be absolutely different. And then at that particular point of time, we used to sign the vouchers also the moment I will check a particular voucher with red pencil, green pencil, blue pencil, whatever number of pencil. And the kind of text will be different. For vouching, it will be different. For casting, it will be different. For posting, it will be different. So all kind of ticks were there. Ulta tick bhi hai, seedha tick bhi hai, teda tick bhi hai, sab tarah ke ticks rehte the. So it used to take, you see, one thing that I always used to find myself in a quandary was that surprise element was missing somewhere for the auditee. Every accountant of every client would know that the auditor would come and will definitely do the vouching of the last month fully. He will come and do the vouching for the first month fully. And in between, of course, whatever may be his procedure, that would be followed. So the most crucial month, which is the first month and the last month, where the cutoff procedures were of a great essence, that was already taken care of by him. And in between, if at all he had to do something, he could do it because that surprise element was missing. And it was an audit of historical data altogether, for without doubt. Today, the audit has taken a very different shape. And one aspect that I would like to say is that at that particular point of time, we used to have the ledgers. Ledgers are there today also, but today the ledgers are in electronic form. At that time, the ledgers used to be in the paper form, in a paper bound book form, for that matter. And some of the ledgers could be as heavy as our own weight, for that matter. So, because at that time one was little bit thin also, for that matter. And today, of course, one has gone bulky, and the weight of the papers is no more there. That's a paradoxical situation to be in. But the fact of the matter is that the entire audit process was different. Today, everything has gone onto the IT systems. Today, no client, whether for internal audit or for statutory audit, wants the routine kind of a checking, believe me. And wherever you will conduct a routine kind of checking, the client is not going to accept. Particularly in the internal audit, there is absolutely no acceptance for the routine kind of an internal audit. Each one of them wants a risk-based audit to be conducted. Risk-based audit cannot be conducted unless you know the organization very well. You know the goals of the organization very well, strategics and otherwise. You cannot conduct the audit of the client. Even otherwise, I think SA 315 is very, very clear that you need to know your client. You need to know the processes of your client. Unless you know the processes of your client, the nature of the work of your client, the nature of the business of your client, how you can even identify the risk for that matter. It is a very common thing to understand that in a manufacturing organization, the risks are going to be different. In a service organization, the risks are going to be different. In a manufacturing organization, probably there could be a risk of procurement, there could be a risk of wastage, there could be a risk of receivables. And if you are in a, you can say FMCG products for that matter, probably the biggest risk is going to be of the marketing for that matter. See, today you look, I think Vidhyadhar may be able to throw more light on it. 2 days before, Shah Rukh Khan and others have received the notice, Ajay Devgan have received the notice with regard to the advertisement for the Vimal Pan Masala from the authorities. Why you are publicizing something which is not for social good? We live in an era, we live in a particular period where any of the chief ministers can at any point of time say that I am willing to ban the liquor. And if the liquor is banned, what happens to the entire manufacturing facility of that liquor company for that matter? So whenever you go for an audit, I think the main thing is to identify the main risks in that particular client. If you are in a company like FMCG, as I said, where the advertisement is going to be very, very huge, I think one of your main areas of the audit would be where you find that there can be a lot of risk for the misstatement or for embezzlement or fraud or anything, could be the advertisement expenditure. If advertisement constitutes about 15 to 20 or 30% of your total expenditure in the P&L account, so where lies your actual risk? Your risk lies in the advertisement expenditure. Of course, the other expenditure with regard to procurement, etc., the labor, etc., may be different. The moment, and then I need to study the law under which law this particular entity falls. Now, the moment the new law comes in with regard to that entity, of late we saw one of the labor laws coming in, and that hit every industry. And that was the risk of the misstatement, basically, that your CTC of your CTC basic has to be 50%. Now, each one of us was actually going in for it to make sure that that actually happens, and there is no misstatement of facts based upon that particular change of law. If I look at one of the organization where the number of employees is too large, etc., probably and I suppose the company has gone for pension scheme. One of the risks could be of the misstatement of the pension expense that has to be booked, basically. The fund which you have to create, and for that, the actuarial valuation, the assumption, presumption, etc., need to be seen in that particular case. So, what is important for you to make sure is that you are able to identify the risks. Firstly, please try to identify what kind of risk a particular entity has for preparation of the financial statements and where the misstatement can actually take place. And if a particular entity has certain risks, then you have to categorize them into the high, medium, and low risks. Basically, in one, even besides high, you can classify something as a very critical risk also, for that matter. And the moment you do it, you have to give it the weights also. I think Vidhyadhar will be touching upon that particular part. I'm not getting into the details because I'm only supposed to introduce the topic to you. And once you find that there are certain areas which are of high risk or of critical risk, in that particular case, you will have to look at the internal control systems with regard to those areas. Whether there are any weaknesses in those internal controls where that kind of criticality or high risk areas are there. And if you find any weaknesses in the internal control system, probably the audit in that area is going to be far more critical from your angle. And that is the kind of risk that one actually perceives. In today's world, I think one of the biggest risks is the IT risk. Now, in the IT risk, primarily one of the things is that in the case of the companies, even the government introduced that you are supposed to see whether the audit trail is continuously available there or not throughout the year. And if it is not there on any of the days, I think this is the biggest risk that you have got. That if you are unable to establish the audit trail, what kind of changes might have taken place in the entire financial statements or in the financial records, which have gone unnoticed. Even in the banking sector, if you ask me, today the Reserve Bank of India has laid down this critical condition that the auditor is supposed to verify this. Auditor is supposed to verify even that the returns which are to be downloaded are downloaded on a daily basis. Forget about on weekly basis or on monthly basis. They say wherever the returns are to be downloaded, these have to be downloaded on a daily basis at the end of the day. So what is important for us is to understand the entity, the risks, and then weigh those risks into the various categories of critical, high, medium, low. Wherever there is a low risk, probably you can repeat those areas even after 18 months. Where there is a medium risk, you may be able to repeat it within a period of 12 months. Or where there is high risk, probably you are supposed to devote far more time. And in critical areas, your attention is going to be far more. And today, with TCWG getting more and more of the importance, though charged with governance, I think you should be able to identify those areas and tell it to the TCWG that these are the areas which are of critical nature, these are the areas of high risk nature, these are the areas of medium or low risk nature, and this is how we are going to proceed in the matter. To me, today, it saves your time, it saves your energy, it saves your, of course, you devote time. I don't say that you don't devote time to the audit, but you devote time to the audit of those transactions which are really of critical nature or which are really of the high risk nature. You will, even if you have to get into the fixed assets for that matter, what you will try to do, you will try to do the audit of the new additions basically fully, and will like to make sure that there's nothing wrong so far as that particular part is concerned with regard to the price, with regard to acquisition, with regard to the budget, etc., etc. And then ensure that whether those assets have been installed, and if installed, whether the depreciation has been charged on those assets or it has not been charged. So you do it right from the beginning. Even in the accounts payable, what do? You try to make sure that there is a combination of the factors which you are able to test through the IT systems right from the procurement stage, that is the purchase order. Unless the purchase order is generated, payment should not be released to the party. Purchase order, the receipt of goods, the entry of the goods, and of course the quality checking, etc. in between is fine. And then the last stage is the payment. You will be able to make sure you try to combine all these factors together in the IT system, that at one place you have got the purchase order also, you have got the receipt of the evidence with regard to the receipt of the goods also, and the quality checking. And then, of course, if all those areas are satisfied, then the accounts payable payment is made. Otherwise, the accounts payable is not made. And similarly, in the you can say the receivables also, whether you have received the purchase order or not. I think that's very important, whether there is an agreement or not, for that matter. And then, of course, the movement of the goods, and then whether whatever GST is to be charged or it has been charged, etc., all those things, and then ultimately whether the payment has been received or not, and whether the provision with regard to ECL has been created or not. So, what is important to be understood is, today don't waste time on the routine transactions. Try to identify the critical areas in any entity and then try to go ahead with the audit. I think this is the crux of the risk-based audit. And of course, the other area will be the sampling part, the determination of the material part, which I think will be taking up in the second leg of the lecture. When it comes, the Vidhyadhar will be coming for the second lecture also with regard to that issue. Today, it is more of the concept of the risk-based audit and how do we proceed in those cases. My sincere thanks to Vidhyadhar. Since he has been involved with the institute also, he has been involved with the NFRA also in the recent times. And I think the kind of changes which NFRA has been able to bring in, those are phenomenal so far as the auditing is concerned. And he has been a party to all those changes which NFRA has been able to bring in. So, welcome, Vidhyadhar, and my very sincere gratitude to you for making yourself available today evening. I think the stage is set for you to go ahead. Our participants are there from our firm also and from other side also. GSA Associates LLP, along with Pillars Group, tries to organize such programs on a, I will not say on an absolutely regular basis, but maybe once in 2 months or once in a month or once in 3 months. But we continue to do something or the other. Something which never struck me and struck me only recently, that we are all entitled to unstructured CPRs for these programs also. We may not be entitled to structured CPRs, because for that you have to go to the institute, but unstructured CPRs we are all entitled to, so far as this program is also concerned. So thank you very much, Vidhyadhar, and thanks to my partners who are there. Sunil is there, Anshu is there, Tanuj is there, Ashish is there, and others are there. Kriti, in any case, is organizing this. So thanks to everyone. And of course, as I can see on the screen, Bubhuta Saab, for that matter. So thanks, Bubhuta Saab, for joining us. And Vidhyadhar, I leave it to you now.
Right. So, Kriti, can I start?
Yeah. Sir, please, sir. Thank you so much.
Yeah. First of all, at outset, really let me profusely thank Chopra sir and GSA Parivar for giving me this opportunity to actually share some of my thoughts in this area of risk-based auditing. And Chopra ji, I've known him since say now almost about 20 years, and my interest in and his interest, that is the accounting standards and Ind AS, they are all more or less same, and I fondly address him as a father of Indian accounting standards actually. So of course he is well versed in the auditing area as well. So I really thank him for giving me this opportunity, and I'll also thank all the participants who have taken the time to join this session. So what in this today's session, I will be taking you through. So I'll try to share some documents and. I hope this screen is visible.
Yeah.
Yes, sir, it
Yeah.
is visible.
And my voice is also, I think I'm audible. I hope it's all right.
Yes, sir.
So in this session, today's session, I will try to cover, two areas of importance, two fundamental areas I consider them. One is this audit strategy documentation, and I'm going to be focusing more on how to document it. Because in the standards, what it says and many things you are all quite familiar with. But the question is actually in India, which we have, is the challenge is how do you actually document some of these things? That is the area. And the other area is about the risk of material misstatement. Which is also a second leg, which is part of the audit planning phase of the document. That also I'll try to address that today. Depending on time, let me see whether we'll be able to do some justice to both these very fundamental starting points in an audit. So, and many times other than this, my these slides, what I will be using is basically the document, the model or sample document, which has been actually published as audit practice toolkit by NFRA. And the first one was the audit strategy document was published sometime in I think November 2025. I was also part of that team which worked on that. And of course, when you go and see that document, there are a few other professionals also who have contributed immensely to this document to make it more, bring a practical aspect of it. One of the challenge, the reason why we came out with this was, the standard actually, if you see the, SA 300 planning, it actually makes that preparation of this documentation and documentation a mandatory thing. It uses the word the auditor shall establish an overall audit strategy. Um, and some people actually practice, they actually mix it up with the next phase, that is the audit planning phase. That's fine, but the overall what is required is this kind of this strategy auditor has to start it. You will see it when you go through the document, because I'll be using the more and more the document rather than my this slides, some of the slides which I have got. You will see that how to document the audit strategy. And how many of you have seen this document already? It is more than 8-9 months. And any of you have tried to use it in the last year's audit?
I would request everybody to use the chat box for your responses.
I think I'll have to, like Lok Sabha Speaker, I'll have to say no, no is the majority actually. But doesn't matter. Let's now, see, go through this, document. Um, and at a high level, to just brief you, the audit strategy and audit planning, what is the difference? There is always a, sort of a, confusion around. Audit strategy is basically a high level kind of a document, and initially it basically lays down your overall direction to the how you are going to do your audit planning. And just because by preparing this audit strategy document, some of might have misunderstood looking at the 36 pages document, that itself is a planning document and job is done, then I'll sign the audit report. But that's not the way. It is the starting point. From there, you will have to take to the next level, etc. So it's basically what and why, and which areas which you are going to look at, which you are going to give more focus. And of course, there will be certain, other standard mandatory requirement of standard which will comply with. Whereas in the audit planning stage, when you go in detail, it is actually tell you how will you actually, what kind of procedures you will perform with reference to the various, items which are identified in audit strategy, and have you given them some additional emphasis? How did you consider, additional procedure, etc. That's the big way of differentiating between these two documents. And so now what I will do is I will actually, after this slide, go into the actual document only, and I'll keep talking about, some of those, important, the areas which we have dealt with. So basically, if you see that document, it is actually split into two parts. One is the first part A, which talks about the professional standards requirement. That is basically the requirements of the SA 300. What does it say? And at a high level, it try to differentiate between audit strategy and audit plan with reference to a revenue. How do you do that? And then the second part, which is part B, which goes into detailed documentation, work paper documentation. It is a work paper documentation of various aspects which the SA 300 requires you to actually include as part of your audit strategy document. And this NFRA document, splits them into around 11 areas, and the standard, list down around 5 areas or so. It actually lists down. So for practical purposes, this document actually puts them into different 11 different areas. And I will actually take you through some of these sections, and I will show you that how this document has been prepared. And the another important area is this document has been actually, what we try to do is um, uh, try to make it more relatable, understandable to the people also. And this is a document which actually, if you go and read it and you make a word copy of that, and if you want to use it, whether it is for a small audit or it's a medium size audit, big audit, or if you are doing a bank branch audit, you can actually modify it. It's called that scalable, they call it. You use the similar kind of a language, but make it relevant to the entity which you are auditing. Otherwise, don't just copy it, word to word. Go through that and read the text. You'll be able to correlate and say that, acha, in my case, I'm doing an audit of a medium size listed entity, which is say into particular industry, that this is the way I need to go about documenting this audit strategy. So that is the whole idea of creating this kind of a document. And we also had seen, it's not to criticize anybody, the ICI's audit work paper templates, if you have noticed, around 325 pages document is there. It lays down a good structure of what all work papers should be there, in which way it's organized. And in that, there is a section on this audit strategy also. But that basically actually just puts down there the requirements of what the SA 300 one of the appendix is there. So then we said that instead of that, if we make it, use some more realistic case, and document it, and put it as a practice toolkit, then people will be able to apply this in practice. That is when that it's we are going to have its utility. So that is the sort of a background. And if some of you see the some the numbers etc. in that in that document, I'll just show you. Open that document itself. So this is the document. I think I'm sharing the whole document itself. Let me go back. Priti, 1 second. I'm just trying to get that exact document.
No worries, sir. We are waiting. Not an issue.
Yes, this document visible now?
Yes, sir, it is visible.
Yeah,
Thank
yeah.
you.
So this is the document which I was referring to, and I'll be using next 30 minutes or so the same document just to take you through how it need to be documented. You can also see here in this document the kind of a simple language which we have tried to use it, and rather than making it a very technical language like standards, try to use a simple language and document this here. And in the first portion, when the part A, when I said, it actually gives high level requirements of the standards. Like it lists down the requirements of SA 300, that what a audit strategy document should cover. And then side by side, it also tells you audit planning document. In the audit planning stage, what should be there? Audit planning stage, primarily you'll have a more detailed risk assessments procedure, the risk of material misstatement, which I'll be covering today in the second part of the my lecture, and then developing the audit program responsive to those various levels. Chopra sir mentioned about assessing the risk levels into different categories like moderate, medium, low, etc. And today we'll try to address that aspect also. That how do you do that assessment of those across various level. So this is the document which actually gives the various details, and within this one, the first document it starts, it can be, this page can be at the end also. It also lists down actually when it was prepared, who or signed off, who are the people involved in that. In fact, if you see this here, there is a involvement of a engagement quality reviewer also. Of course, he is not going to be a person who will be preparing it, It will be prepared by the managers and the supervisors of the audit team, etc. But then it will be reviewed by him. So it means the EQCR is involved from the initial stage itself. And this is the way you can document and say that yes, EQCR is involved from the initial phases. And the next, the part or the section which starts about is the introduction and scope of the engagement. And many of us actually take it very lightly. We all know यार क्या है, Companies Act में audit करना है ना, हमको तो पता है क्या है, that is the scope. But it is not just at that level. So basically what you will have to do is, whether you are an auditor of a standalone financials, whether you are auditor of a consolidated financial statements, and how many actually the the subsidiaries or the components are there, what is the operational structure of the entity, in which all locations does it have its operations. So you will list down that. And then the next stage also you list down is, even when you are doing a company's audit under the Companies Act, is it an audit which you are doing for the India based company or a US based company? And if it is Indian company, then how about the foreign subsidies, etc.? That also you will have to make sure. If you are auditor, you will have to make sure, or if there is a component auditor, you have to tell him what you will be certifying the financials from that entity is the India's based financial statements. I'm not going to just say that till somebody sits down here in head office and does some adjustment columns and then that is the end of it. No, the financial statement which submits has to be in line with the India's based financials. It's called some people call it a group reporting pack or a package. And in addition to this financial statements audit, there are many other responsibilities in India which we know. It is not like the US, where you will just certify the financial statements are fairly presented or not. And another one is that internal control or financial reporting. In India, which are many other things. Like Chopra sir mentioned about, we have to certify whether the audit trail, IT systems audit trail is maintained or not. And we have a very important responsibility, CARO, which has been coming since 1975-78. There are so many reporting responsibilities. Auditor is there. So that is also a scope we need to document. And then one very big thing from 2013, which has come, is also, which is based on the US, changes that happened, that we are expected to, issue an audit opinion on the adequacy and operating effectiveness of internal financial controls. On this, of course, many of the people will say that audit of financial statement, within that, review of the internal control is integral part of the audit. But still, in spite of that, this has, this new requirement which has come in since 2013, and there is a separate opinion for that. That is also a requirement. And then there are few other matters in the Companies Act also mentioned, the auditor. So list down all those areas. And another important area which has come is the 143.12 fraud reporting. So if these things are not documented and the audit team is not aware of it, because some of them might be juniors, new people which will be there, or ourselves sometimes seniors, we also miss out. So this is an area where we'll actually try to put together that, अच्छा मुझे क्या क्या करना है, बहुत सारे इसमें है, how are you going to do this? At what point of a time I'm going to do it? And then SEBI listing regulations में related parties, etc. There are some additional requirements which are there. So those have to be, and if there is the quarterly financial results also, if as a statutory auditor, we are the one which are actually responsible for certifying those, that also need to be listed down here. This is also our scope, within the scope. So this, the audit strategy document covers all these allied areas of responsibility of the auditors. So this is how you list down. And then it comes to, next is the financial reporting framework. We have seen many of the people which are writing Even in audit report, they mentioned the financial statements are prepared as per the Indian GAAP and other customary practices, etc. What is Indian GAAP? There is no documented this one. Like US GAAP, there is no documentation of Indian GAAP, right? So be specific, because within accounting standard framework also, you know, under 133, there are two sets of standards. Some has to follow Indian accounting standards based on the IFRS, derived from IFRS, and the other companies, they will follow the accounting standards framework. So this is one very common area which will actually make a mistake, or we don't document it. And if you see the NFRA orders, there have been errors by the auditors on this part. They were not sure about whether to follow AS or whether to follow the Ind AS framework. And within Ind AS also, there are standards which keep changing. But they were actually referring to some of the old standards which came in 2015. So this is an area which also need to be documented. And another area which also you will have to document, and then within the Ind AS framework, what are the components of important component of financial statements which will be certified? Many people, if you ask them, they generally talk about balance sheet and statement of profit on account. That's it. But there are, under Ind AS, statement of changes in equity is there. Other comprehensive income, there is a new concept is there. And there are, notes to accounts, there are detailed disclosures. So that is an area which you will have to actually, document it clearly in this app. And another area also which I'll draw your attention here, of course, in the subsequent part of document also, some of these get repeated. When you ask for the audit of foreign components, etc., you will have to make sure that auditor is supposed to do the audit and give you opinion in accordance with the standards on auditing applicable in India. If it is a UK subsidiary or Singapore subsidiary, that auditor can't say that I have audited based on the standards applicable in UK or somewhere else, or the code of ethics applicable there. No, he is supposed to actually do this certification of those components in line with what is required in India. So this also has to be documented and communicated to that auditor, component auditor. And then this document just lists down various other parts of the audit strategy document, which I will take you through again, at high level what it contains. Chopra sir, am I okay going in the right direction?
No, absolutely.
Yeah.
Absolutely. The only thing is, can we raise the questions in between?
Right, sir. You can raise, because this is our internal this one.
Because that will make it more
time is not a
lively.
constraint for us, and if we
Because
can't cover everything,
they'll
we'll do it in session. But feel free, raise questions, sir.
Yeah. One of the questions that I am raising, because this 143.12 actually has been causing a lot of heartburn, a lot of problems, very frankly.
Yeah.
So what happens is, in certain cases, when you go for the audit, the matters are already with the CBI, etc., etc., and it is known to the board, it is known to the entire world. Is the auditor supposed to take cognizance of that also? Or it is already known to everyone on the earth, for that matter?
Yeah. Right, sir. Here the short answer is that if there is this one filed under 143 with MCA, then auditor, even if it has CBI, it has been reported, or RBI, it has been reported, he need to report this here. His life will be a little simpler here in this case, responsibility, because some facts are more facts are known about this fraud, etc. Otherwise, always auditors sometimes have a risk that am I reporting over reporting, which may turn out that it is not a case and I might be held accountable. But in some cases, if their management has reported, and this one, it's easier and reported, because MCA would like to know, would also like to have a database of all these frauds, because it has established itself an SFIO, a separate unit also. So this will be one of the good source for that SFI also to know what is happening in the company. And sir, one interesting thing I noticed was somebody quoted this in RBI, we are already reporting as per their circular. Why are you insisting on us to report again? Then I looked at the circular. It is so interesting. RBI also says that if there are any other reporting requirement to other regulators, you continue doing that also. So that they have not given you, the RBI itself also has not given you a concession there.
No, RBI and banks are a different matter. What I am saying is, suppose there is a company,
Yeah. Yeah.
the government actually undertakes the management of that company because
Yeah.
all those cases have gone to CBI, CVC, whatsoever you can think of,
Yeah.
basically.
Yeah.
Uh, and in that particular case, when the new auditor comes in,
Yeah.
no, there is no fraud in his period. The frauds occurred in the earlier period, basically, whenever these occurred.
Huh.
And the management has been of the firm view because now the management is from the government. The management says that since these have already been with the CBI and CVC, everyone, and the MC has actually overridden the management. Why should you be reporting this fraud today? Because these frauds took place 10 years back or 8 years back or 7 years back. You do not even know that what will be the number of those frauds which took place at that particular point of time.
Yeah.
So that is one aspect, basically, of 143. Whatever fraud you detect during your period, that in any case has to be reported. There is no doubt about it.
Yeah.
But where the cases are already with the CBI and you do not know even how many cases are with the CBI, for that matter, or with the other regulatory agencies. So far as the banks are concerned, if there is an advance and then the advance is likely to go bad because of any kind of a fraud, you should be reporting it to the Reserve Bank of India the moment it is exceeding 1 crore rupees.
Yeah.
For that matter, that goes without saying.
Yeah.
But so far as this particular part is concerned, here there has been a difference of opinion. So that's one thing that I wanted to know from you.
Yeah. So this is the case which you are referring is a quite different kind of a scenario. I agree there could be difference of opinions here because so much time may also must have elapsed since all that thing happened. Maybe it happened some of these things in the previous Companies Act era, and since some things might be going on, so the obligation of the auditor is this. Yes, it it can be one can take a different view on this matter, sir.
Anyone else willing to ask any question? Tanuj or
Yes,
Sunil,
sir.
Anshu?
I have one question.
Yeah, Anil, please.
Vidhyadhar ji, this is Anil Sharma.
Yeah.
I have a question.
Good evening, sir.
Good evening.
After a long time, we are seeing.
Yes. So my question is that, please explain how this planning part, strategy part as well as planning part is to be taken care of when there is a virtually like a continuous audit. I mean, because of the listing, auditors are going every quarter. And how to ensure that those limited review and then final, how that bridge is to be get. That is number one. And second quick question is, when we go through your document which you are suggesting, of course, it has been suggested by NFRA. Yeah, I could see that there is a lot of creating a lot of documentation part of it. Sometimes we forget the what you call it, the soul of the issue. We give more stress onto the creating the documentation rather than, for example, there's you talked about meeting with the client. That's one point which was there. Yeah. Now, I have seen some of the minutes of those meetings. Frankly speaking, if you read those minutes, you will find that right from the beginning you are actually compromising. Some kind of a indication is there. So please explain these two, 3 points. Thank you.
Yeah. So this the timing part, I'll just briefly answer you. As far as the quarterly interim review, limited reviews are concerned, when you start in the first quarter, etc., the different procedures itself you will perform for the purpose of doing those quarterly reviews. And there is a different, you don't apply this auditing standard, but some other review standards which you apply. So you follow for that purposes, limited review purposes, that standard, which more talks about, the analytical review of financials, and also trying to understand some, overview of getting a controls, etc., internal controls. So only that kind of a limited documentation is there, and you maintain that. And when it comes to this audit of financial statements, year-end audit, normally what you should do if it is, big company or a medium-sized company, I would recommend that you start doing it sometime in the October, November kind of a situation, which you can start doing this as an interim phase of the audit. And I remember during your articleship also, although there was no such requirement, my boss used to send, you guys are now free and go and do some 3 months coaching and come back. So this interim audit concept was there long back also. So now here it is much more, I think, beneficial if you do that. So sometimes around that time you start, and that point of a time you develop this kind of a process of audit strategy, and then followed by that, then you will do the audit planning, which is primarily all this risk of material misstatement assessments and systems evaluations in detail. That phase you can do it. So that is the way I think I would actually advise people to do this quarterly review as well as the audit timings. I hope, I think, the timing point of view, Anilji, I think more clarity is there now.
Anil,
Yeah.
Anilji,
Yeah.
Archana
And
is also there.
yeah, no problem. And
I
on
will
the
request Archana
on the
also.
documentation part of it, sir, the requirement is there. The only thing is it is for all your good, the auditor's safety perspective itself. In case tomorrow something goes wrong, apart from that, it does help you fulfilling the professional requirement in true spirit when he documents it. But if tomorrow something goes wrong, etc., also he will be able to justify and support his case that this is the way I have done the audit. These are the requirement of the standard. I have complied with this requirement of standard. Then, why do you hold me as a professional misconduct? So that is the biggest advantage of this, documentation of this, audit work papers. And SA 230 also gives that also as one of the, important reasons that why we need to document this. But apart from that, one more reason also will be there is that if you are having a reasonably medium-sized audit where more number of people, etc., are involved, bringing together everybody's actions and attention towards one way, this kind of a documentation also helps.
No, but I think one thing that you may appreciate with that
Yeah,
you see this planning meetings with client and engagement team. It's
yeah,
fine
yeah,
that you
yeah,
can plan the meeting, you can organize the meeting.
yeah.
No, the client explains you something different on that particular date. Unless
Huh,
these minutes of the meeting are
huh,
signed by the client team also,
huh.
what kind of value do you attach to it?
You can actually have some of these documentation, sir. When you discuss, you send them a note for asking for their confirmations.
Yeah.
It will be a good
I
idea.
think that
What you
will be very
suggested is
important.
a good
Yeah.
idea.
That will be very important
Yeah,
because whatever he discusses with me,
yeah,
whatever his team discusses with me,
yeah,
unless I have the confirmation from him in writing,
yeah,
otherwise tomorrow he will say, no, no, I explained you something different. Very fair.
yeah, yeah, yeah.
Okay.
Absolutely right, sir. And also, only thing is when you're sending him the documentation, don't send him that what you are going to do with those audits. So that surprise element which you mentioned earlier will be lost. Only
Yeah.
send him the, these are the matters we discussed and this is the explanations which we gave.
Archana, you have anything to say? You can unmute yourself.
Yeah.
Kriti,
No, sir,
on
nothing more to add. In fact, even I'm just learning just like you. So nothing more to add. But I agree with the point you just made. And what Mr. Kulkarni said, it's more about documenting the explanations which can impact rather than sharing with them the audit plan per se. Yeah.
And in fact, we are actually in TCWG. This is also one objective, that circular, that when you discuss with audit committee or TCWG, you send them your discussions and seek a confirmation from them.
here, this slide is very dangerous. So Dharmaraj is there, Dronacharya is there, Bhim is there, Arjun is there, Abhimanyu is there, Ghatak is there, and Nakul is there.
So the audit will be really true and fair view of the financial will be given. Dharmaraj went for true and fair view.
Sir, I would just like to bring some more clarity towards the question Mr. Chopra has raised.
Yeah.
About the communication with the client on the confirmation of the minutes of the meeting.
Yeah.
Once, as an auditor, we have sent it to the client, and we have seen the receipt of the communication. What is the stance of law in that case? Can we understand? Because not necessarily every time a client signs it off, or should we insist on the signing off? What would be the scenario?
Yeah, there will be situations where the clients may not sign it or give it to you on time. And there have been some cases which are serious. Even engagement letters, sometimes people have not signed. But it is a really good practice in the own sort of auditor protection perspective. If we are able to get his signature, it is good enough. Otherwise, if you have some documentation that evidence to show that you had shared your the meeting with them and the discussions, and even if the his acknowledgement is not there, it's fine. Not an issue. But in your strategy document, in your this one, if you mention that, that will actually help you. Later on, if there is some other court case matter, other things, this documentation will definitely help.
Thank you, sir.
Yeah. And in the audit client meeting, etc., or this planning meeting, the one of the first part is your internal meeting. There will be one meeting with the client, another one is with your staff member, etc. It is very important that when you document, when you have this team of people, the seniors with some experience of background and other things, explaining the team about the client, the same client, or if he is a new client, but your other experience, etc. It's a good idea to tell them that what are the things about the industry and the environment and the entity. That is one critical area you should actually document. And also you should actually document normally actually your firm should also have certain kind of the policy manual, which is one is the SQC manual and other one is your audit approach manual also. One should actually, even it may be a small one, in spite of the standards on auditing, it is good that one should create the manual. And in both these, some of these places, your different layers of your staff and what are their responsibilities, that is also important to document. And even in the meeting also, sometimes it is very important to make sure that some of these, especially the your own experts or the subject matter experts, when you bring in the IS auditor, or if you have got some actuaries which are working, or evaluation expert, and the EQCR, making their responsibilities clearer and clearer with reference to the audit. That's what we should actually document in this part. And one emphasis should be there, which you have mentioned here, is that the compliance with the code of conduct, and then professional skepticism, importance of that need to be highlighted during this this meeting, and that should be documented. It should not be so like that. You tell that, okay, you go and just read code of ethics here or understand the professional ethics ka kya hai, the skepticism kya hai. But the seniors, we know, we have been, practicing this quite long. With some good examples, if you are able to explain that during this meeting and emphasize that importance of that, it will help the overall audit quality. And this is what a 3.3 is what I just explained to you. And then about the materiality, Chopra sir, materiality is also determination is part of this audit strategy document, which is there, I think, sixth or seventh part of that one. But in this planning meeting, the somebody, the manager level or supervisor level person who has, prepared this materiality limit, he should explain what is the basis for that and how they have done, gone about doing this material determination. And if the other team members have a slightly different view or it will be a good idea to take that also into factor.
Vidhyadhar sir, there's a question in the chat box.
Yeah.
Yogi sir is asking, is
Yeah.
sharing audit observation queries on mail sufficient?
Audit observation queries on mails.
Yes.
You can put that. We use different kind of the modes for communication. Sometimes the audit queries are also actually raised verbally and documented on your paper. And now we have got so much this email and the technology has developed, which is giving us much more evidence. That is also good enough. Not an issue, but you need to keep those all in your paper. And after some quality review or something, when the inspection happens, that time don't try to pick up your old emails and try to put them here. And once you send those mail, etc., whether the response comes or not, the clarifications, etc., which you obtain verbally also, you document them, take a printout of the email and document that and keep it in your work papers.
Archana ma'am, please.
Unmute yourself.
No, sorry, this question just made me rethink about the earlier question we were asking in terms of do we need assigned minutes? Because see, as much as that's a good practice, but honestly, practically, that doesn't seem to be the practice in sense you don't really get it signed. I was just wondering, would that also work if any explanations we just say that if you disagree, kind of if any understanding is not correct, then you revert, rather than necessarily wait for a signed. And like I said, while it may be a good suggestion, but is it really the practice? It is not. And if we do feel this is advisable, then how do we make sure that it is generally done? Because here, yes, in the group, we'll tell them it's a good to do, but is it a must do? Would it fail tomorrow a review test? I think that would also be important. And as long as we've made sure that the person we were discussing with this has the right authority, it's been reviewed internally, you've seen some documentation, and maybe then just sending a negative confirmation type should work.
Because I agree with you. Many times the clients will be refusing to sign off this kind of a thing. But the TCWG kind is a slightly different because TCWG is in the standard. There is a lot of emphasis on their responsibilities also, and it puts a responsibility on them to a lot of information to be given. But here with CFOs and others, when you discuss, there will be situations, a lot of situations where they will not actually sign off because if you start getting signing out with them, then the drafting that minute and finalizing itself will take more than the audit time.
Because even during the entire audit process, you do so many discussions. We don't document, we don't get everything signed as long as you've seen something to some documents to kind of corroborate what the explanation is reasonable.
Correct. Yes, I agree with you. It is not like you said, it is not a must that you obtain there. That's why the one of the purpose is that because such situation happens, I am documenting myself in my file, and then you put down your the overall preliminary risk assessment and audit strategy. But that portion is there in the section 10. I will of this document. I will take you through that, and then document your in detail this team responsibilities, and which are the the various experts are also going to be involved, IT system, actuary, fair valuation, and those kind of and very high level the timelines. If you are going to do interim, Anil ji had asked about this. Yes, normally if you should do interim audit and then a year-end audit. But in some small cases, it may not be possible. Then you will do everything at year end, and especially some of these bank audits, etc., where you get appointment letter only at the last day and given 3 days. This interim audit and doesn't work. But in other cases, one should actually do that. And then here you document. This is a section where planning with meeting with the client management. And it not necessarily just meet the CFOs or head of finance. Try to meet head of internal audit, head of risk, company secretaries. And in fact, with this TCW circular, etc., meeting the lead independent director or audit committee chairman in this before preparing this audit strategy document, it's a very important exercise to do. Of course, the TCWG the standard says that you should communicate your planning and risk assessment with the TCWG also. But before that, it is good idea to meet and understand from their point of view what are the areas. So what are the areas you will discuss with the client, etc. Overall, you will actually by now you would have read their annual report and other quarterly the results and their investor call reports, etc. You have some background about them and you would have seen their financial. Now you are also trying to understand more from the management, like what are the big changes in the company's operations. Like in this particular company, this is the one which we took was a automobile industry, which global operations, huge number, India also quite big operations. And if you see their financial statement, some of you will be able to correlate that which actual company which you have taken these numbers, etc. from. In the subsequent sections, I'll show you. And here, the company said that they are trying to expand this one in European countries, and there are various sort of in the Middle East, etc. Also, they are trying to acquire some entities. So, and what other changes have happened in some of these operations? The regulatory developments in the various areas where they are working that need to be documented. And one of the areas also in this automobile industry, important area which is coming is this in India also this has come in extended producer liability for waste management, the scrapping and all. And very important area, it will have an impact on your India's 37 provisions, etc. If they're so understand from the management how that law is evolving, and what is the sort of an potential implication which will factor in your audit. And this company had also, group had one subsidiary which is the NBFC financing. Many vehicle automobile people also have their financing, so that also financials are consolidated. So from that perspective, you asked that what were the management told there was RBI inspection and there were some issues on risk management and things like that, which is in subsequent part of this document. It has been explained. How does it impact your accounting? Then again, internal audit and risk management systems. What are the changes? And more importantly, one important change was IT systems implementation and upgrades. They mentioned, management said they upgraded, and now their sales and inventory management systems, the entries into GL systems are coming, automatic interfaces there. So obviously, it is going to impact your, the control environment and your audit area. So these are all, you gather information here. In the audit strategy phase, you gather information. It is not that here itself you will go and document that what I'm going to do.
So, sir, can I ask a question?
Yeah.
So, Kulkarni ji, thank you very much. You are sharing
wonderful. Welcome, Praveen. First, let me welcome you.
Thank you, sir.
This show.
And, thank you, sir.
I'm grateful to you for joining, and I think this will. I'm so happy today that we have Praveenji, we have Archana, we have Anilji, etc. All these people. It will only improve the level of the discussions, basically, the quality of the discussions. I think that's very important.
Yeah.
Yeah,
Thank you so
Praveen,
much, sir.
please go ahead.
So I have a very practical question, Kulkarni ji,
Yeah.
and I want to understand the thought process behind it.
Yeah.
There's a lot of discussion happened, and it's around TCWG. So
Yeah.
what these companies have done, they have, along with audit committee, they have included management, and they have decided that, okay, for our company purpose, this will be called TCWG. So whatever audit committee was doing, now the management is sitting along with the audit committee, and that meeting is being treated as a TCWG in most of the cases. So just wanted to understand the thought process behind and whether the purpose for which there was a discussion around this topic, whether that
Yeah.
purpose is getting achieved, or where the independent interaction with the audit committee used to happen with the auditors earlier, whether that purpose has got diluted. So I thought I'll take a little clarification on this point. I'm sorry, it's very practical,
Yeah.
but since you picked up on TCWG, I thought I'll ask you.
I will also supplement Praveen's view. You see, besides management getting involved, I think one of the very important areas where I also sit on certain boards, the intention was, I don't think that was the intention of NFRA. But what the board has done is that some of the boards have said that the entire board is TCWG.
Yeah.
No, one has been able to tell them wherever one is on the board, and one has been able to actually see that that practice does not go on. Because one said that if at all TCWG didn't agree to something, or auditors felt aggrieved, there has to be some body to which the either auditors can go or TCWG can go. If the entire board is TCWG, then to whom it goes, basically, ultimately, at the end of the day. And then they are trying to say that one of the directors becomes the nodal officer, very frankly, because the circular says one of the directors has to become the nodal officer. If the independent director is going to be the nodal officer, I don't think that serves the purpose. It should be the nodal officer, should be the management. Nodal officer should not be the director under any circumstances. That's the way I look at it. Why I'm trying to supplement what Parveen is saying, because I'm facing these things practically as a board member, forget about as the auditor. And more importantly, Vidhyadhar, what is happening,
Yeah.
CWG meetings might be serving some purpose. There's no doubt about it.
Yeah.
But it is the reverse way around. TCWG does not tell anything to the auditor. TCWG only wants auditor to tell them something. Now, I think TCWG has also to take a responsibility and
Yes.
to tell something to the auditor as to what requires to be done, what are the critical areas, etc., etc. Now, wherever one is on the board, one has been very, very frank. Now, very frankly, in one of the companies, I said CSR to me is one of the important areas which you
Yeah.
need to look into. Very frankly, the kind of practices which are there prevalent in the CSR today, one said that you need to look at the CSR.
Yeah.
Now, the auditor may or may not like it.
Yeah.
But the point that I'm trying to raise is threefold. I think Praveenji's viewpoint is one part. One is that can the entire board be the TCWG, whether that was ever the intention of NFRA? And secondly, whether the nodal officer should be one of the directors or should it be management? Because being a nodal officer is more or less a full-time job, very frankly. And I don't think independent director should assume that particular role in those circumstances. And whether it is TCWG which should be communicating the issues to the auditor, or only the auditor should be communicating the issues to the TCWG.
Yeah. Sir, I'll give some quick sort of my views on this. One is the TCWG is actually the definition based on the definition given in the standard and the legal entity structure. It depends. And in the Indian company structure, if you look at the definition, in the UK company structure, it is actually TCWG's entire board of directors. because the functions which are mentioned in the standard, it falls in the area of the both the executive directors and independent directors, entire board. And of course, yes, for the practical purposes, for your this one, and if all other directors also agree, then the TCWG can be a, they can actually make a subset of their TCWG as a party with whom the auditor can deal, and that party also has to give keep giving the information to the auditors. And the second, I think one thing many people we in India which we actually got confused with audit committee only becoming the TCWG was, I think in US there is a requirement that communication is with only audit committee. There is no board of directors का ये उनका standard ही ऐसा किया हुआ होता है. So easily many people who are using that practice talked about that. But if you look at the UK standard, the ISA itself, our equivalent ISA 260, it actually adds in the UK environment, TCWG includes both executive and non-executive directors, because the legal structure is like that. So one has to keep that in mind, legal structure. But the circular says that you can actually, for practical purposes, don't take that entire board of directors TCWG. You can have a subset of that. And then communication point which you raised is, it's very important. The issue is we are only trying to actually educate the auditors about the requirement of Companies Act and this auditing standard, etc. We should actually give some high level education to the directors also, what the standards require, because in most countries today the standards on auditing and accounting standard part of the statute. It is the responsibility of the directors to follow not just accounting standard, even the auditing standards also. In a way, it is their responsibility because compliance with the laws is a requirement. And when the standard says that they also have to communicate there what are the areas they would like the auditor to focus and give some risk and new developments happening etc. in the company. They can't keep on saying that for sensitivity purpose, I'm not going to tell you this, I'm not going to this one, but you only tell me you are. That is not acceptable. It should be a two-way communication, definitely, sir. That has to be. That is why that the NFRA circular talks about the establish a framework for communication. In that communication, the starting point should be the board of directors. Everybody should say that yes, in India, in Companies Act, I am the TCWG. We are all responsible, and it is up to them how they will take care of their responsibility. What is happening, whether they communicate. Tomorrow, if something goes wrong, like ILFS and others, they can't say that nobody came and told me. Come on, you are supposed to supervise the auditor's work or the audit committee. Did you read the auditing standard? Did you even at least ask how many auditing standards are there? If you don't know the standard, how are you going to supervise the auditor's work and ensure that audit is happening effectively? So this is one area, sir, at our, I think, at industry level and or the regulators level, we should make sure that the directors scale with thoda. We don't have to make them expert like auditor, but give them awareness of some of these, the standards. About 4 or 5 standards will be important, and what the auditor does, how laborious his work is, and why he requires your inputs also. So that kind of some training is required at that level also.
So, Kulkarni ji, my question was on the thought process of like TCWG.
Management, no, sir. Management, no. But executive director can be.
One of the questions which has been raised by Niranjan ji is who has to identify TCWG? The directors say that the auditor should identify the TCWG.
Because what the standard says is somebody has read that standard probably, that director. The auditor is supposed to identify who is TCWG in that company, looking at the definition of TCWG and the entity's legal structure. So that is why the auditor has to actually identify and communicate and accept. This is where the acceptance is required definitely from the board of directors. It can't be that I send a mail and it remained that way. This area I will say that you obtain acknowledgement.
But I think the point which Parveenji has raised is very relevant. Can
Yeah.
the management be as a part of the TCWG? Unfortunately, they have been able to bring it in.
Yeah. Management director level में आप है तो you can, because TCWG includes both executive and and this in this case the non-executive directors have to actually consider this as seriously, whether nominating only an executive director as the nodal officer.
But again, I will request Vidhyadhar,
Yeah.
with your
Yeah.
accessibility to the NFRA.
Yeah.
Probably there is a need to redefine TCWG. TCWG may not be audit committee, but TCWG cannot be the entire board. TCWG has to be a mix of audit committee plus one or two directors from the board.
That is what is actually mentioned in
There is
the
no
circular.
point. There is no point if the entire board is TCWG.
But
Absolutely, it serves no useful purpose.
yeah. सर वो इजीली वो सम सर्कुलर में वी हैव पुट द व्हाट द स्टैंडर्ड का डेफिनेशन एंड ये है रिक्वायरमेंट बट वी हैव आल्सो गिवन दैट एग्जैक्टली व्हाट यू सेड टीसीडब्ल्यूजी इज द ऑडिट कमिटी प्लस few directors.
So we have a question from Sundarajan sir from Chennai.
Yeah.
Sundarajan sir, you may ask.
Yeah, this what I was understanding, combining the point of Mr. Parveenji and Chopraji, and finally is Vidhyadhar's point. Invariably, what happens is in case of this not large listed companies, in between listed companies, wherever we are making presentation at the time of half-yearly closure, and annual closure, quarterly closures, our presentation is restricted to audit committee, and after that, the audit committee takes it up for the board to approve. In that situation, is that the TCWG is restricted to audit committee alone? That's a million-dollar question which happens, and who has to define that?
The auditor has to determine based on the standards requirement. If our standards did not have this requirement that the persons who are responsible for supervision, governance, and strategic areas, then there was like US, you could have only gone ahead with the audit committee.
So
But
invariably,
standard
audit committee includes managing director.
Yeah.
So in that
Managing director,
situation,
yeah.
so it's going according to his directions. That is why the reason. So if the audit committee consists of the managing director, and we are reporting, not reporting, we are submitting our information to the audit committee, can we safely conclude that we have communicated with the TCWG? That's a question which I am asking.
No, I don't agree with that. Unless we have an agreement with the entire board of director. Yes, TCWG is this, but you communicate with so and so people, the audit committee plus these directors or the audit committee. Unless that kind of acceptance of responsibility from their side is not there, then the auditor's stand is weak. Not only in compliance with the standard, but even when you go to something wrong happens tomorrow, if you want to say that what can I do? The directors didn't tell me anything. Then that fellow TCWG say that you never asked me anything. You only dealt with the audit committee. So how do I know?
Appreciated. Thank you.
Yeah. So from this point, very important, because some of these cases which have happened, this kind of issues have come up.
Yeah.
Archana.
Yeah.
Archana.
So I think this is an important topic, and I'll just request Mr. Kulkarni. I remember when this paper had come out, I did actually the discussion with him helped me very much to understand the intent. And so if you can just expand the way I understood. One is I wouldn't say that the board can never be, because it was also said if board is identified, then it defeats the purpose. I think it's an assessment that you make case to case. Usually we will expect audit committee, and like Mr. Praveen said, it could be audit committee plus a few more maybe from executive some executive people. But let's say in a smaller company, etc., wherein the segregation of duty may not be that much, it could be that you may land up identifying board. And I also recollect a very fine point that you made, that even if I had identified audit committee, you also see, because audit committee somewhere is acting as a sub group of the main, it's the responsibility of the board which has been kind of delegated. So you also see, does the audit committee go back and communicate these things to the board? And let's say if you're not satisfied, it may require you to actually change how you're looking at those charged with governance and so on. Is my understanding correct? And we also said at times, the UK example you had taken, that you may just need to, UK even envisages the auditor then actually looking at the interaction between the two. So I thought if you could just, what you explained to me, if you could explain to the wider group, it will be helpful.
Yeah, I think this is an area, Archana, I think we need to have one separate session. It's a quite interesting area. But yes, in some smaller companies also, when you say that I'll only rely on the audit committee, maybe in some smaller companies that audit committee may be a very weak committee. We keep that in mind. Maybe the entire board of director, maybe in such cases better to deal with rather than only the audit committee. So it is not sort of a we can have one rule that in small companies I'll only deal with audit committee, in big I will deal with something like that. So it may be the sort of an other way around. One need to look at it, and definitely the current because the standard is based on it is what the legal structure of the entities are there and what the different people's responsibilities are there. Based on that, they have defined it. And ultimately, they have also looked at who is going to be responsible for the financial statements of the any entity. So keeping that in mind, this legal systems are different. So we need to respect and go with that, rather than it is very practically difficult whether this is I can't do it, because if we do that, then we'll be defeating the whole purpose of the laws itself. See, even the Companies Act, if you look at it, the financial statements have to be the board of directors. Of course, the board of directors will give you delegate signing to somebody else, but ultimately they take responsibility. And I don't understand why the board of directors actually are reluctant to actually deal with auditors. You have actually given a statement in your board of responsibility statement about auditing, internal control, so many statements you have accepted. But when it comes to the auditors, this communication, you don't want to do it. This is a very strange thing in so much discussion happening in India about this TCWG, the circular and this. It is just, drawing the attention of everybody that this is what the law requires and this is what is the legal system is there. And that is how the standard is worded. And, try to follow that. And, this area and the another area is also on that CFS responsibility. They have been, two areas which I think the entire board of directors governance, they have actually, some of them have really misunderstood the intention behind this and their responsibilities. Responsibility is actually given in the law of the land.
Sir, can I also raise one point?
Yeah.
Sir, if you look at the definition in SA 260 of TCWG, it says that they are people or group who oversee a company's strategic decision and general accountability. So how a independent director falls into this definition? Because the word is strategic direction as well as general accountability. I personally feel that TCWG is only like a KMPs. They are the one who are responsible, who are accountable. And of course, if we look at from that point of view, from SA 260 definition point of view, can we crystallize on this?
Sir, I will actually just, this definition is the same in the UK law and UK standard also. So I would request you to just have a look at the equivalent standard SA 260, the UK one, which is given quite elaborately on that. We have not done here. And as far as the management KMP, etc., which you are referring to, that is covered in the 265 actually. The standard covers their responsibility also. When you talk about internal control systems, का communication, etc., that 265 में cover करता है उनके भी. हाँ? So the intention of 260 is go beyond the KMPs and the bigger lot. Huh? Probably if you see the another system, German system of governance, two-tier system is there, where there are board of supervisors and board of management. Huh? And probably in that case, this kind of overall strategic direction, etc., which is at the board of supervisor level, the management के साथ तो आप डील करते रहते हो, executive director. But in addition to that, the other people who are responsible, auditors should also deal with them. That is the whole objective. Because the entire financial statement, end of the day, is the responsibility of the board. Whether you call them executive director, independent director, whatever you call them, they are responsible. So the auditor is working directly for that purpose. So that is the reason the standard actually says that don't just deal with the financial controller or the audit committee member, and दूसरे लोग भी हैं who are going to be responsible and accountable for the entire activities of this one. Of course, the level of responsibility could be different. Somebody will be oversight, somebody will be executive management. That's different. But it is better that you communicate to everyone. All others are also aware, and tomorrow there is nobody says that I was not aware of this, what was happening.
If we look at the practical side of it, the kind of meeting which we have to have with the TCWG, you are just talked about that planning meeting. Then after we have made the audit plan, then again second meeting. Then third meeting is when we have virtually completed the audit, and then of course the closure meeting. At least 4 meetings are definitely there. So in these 4 meetings, every time meeting with either it should be the same set of people, or if we say that we met with one, we met with another. So my point here is that this TCWG has to be crystallized.
उसको इसीलिए वो नोडल ऑफिसर को भी आप इसको ये कराइए. उसको नोडल ऑफिसर मीन्स वी आर नॉट आस्किंग दैट आप एक कंपनी सेक्रेटरी और सम अदर पर्सन को ऑफिसर बना दो. विद इन द इंडिपेंडेंट डायरेक्टर इन TCWG, उसमें आप उसको एक नोडल पर्सन को बनाइए एंड उससे मिलते रहिए. आई एग्री विथ यू दैट यू डोंट हैव टू कीप ऑन मीटिंग different people at different time. That should not be the objective. So that is why the best portion is all these kind of things put in a framework. Timing, whom do you meet, what kind of things will be high level discussed, all that put in the document and exchange that auditor and the board of directors. So that becomes a framework.
Vidhyadhar, there is also a question by Ashish Arya. He has asked whether TCWG can be without independent directors.
No, it cannot be.
Cannot be. That was my view also, but I think since he has raised the issue, I thought you are here. So to me, very frankly, what is important today is that we must crystallize the TCWG as well as the nodal officer. I think that's very important. Without that, things are not happening. And the other thing is, how many meetings TCWG should have with the auditors? If you ask me, the companies, for the sake of the sitting fee, I'm using that particular word. They only want maximum 2 meetings of TCWG with the auditors. They don't want more than that under any circumstances. Even some of the companies say that 1 meeting is good enough, sir. You have met in the beginning, and then you meet the next April and can take the stock of the things. So I think somewhere or the other, education to the directors is going to be more important. Education to the promoters is going to be more important than education only to the auditors.
Sir, may I add? Maybe my views could be considered radical, but this is how it is. That in audit committee, normally the condition is that at least one person of audit committee should be financially literate, means he should be able to comprehend the financial statements. Now, as per SA 265 of UK, as you have referred, Kulkarni sir, TCWG is audit committee or board of directors, individuals or bodies responsible for supervising the strategic direction and financial reporting process of the entity. More often than not, we find that boards struggle to get that one person who is financially literate on the audit committee in the practical scenario, especially when the board consists of most family members. And then we have somebody who looks at the strategic direction. So people who are in the audit committee are not necessarily the part of strategic direction people. They may be sitting in the executive committee or at the board level. So the combination of this TCWG cannot be only with the audit committee. Maybe, may not be. Not necessarily. That's what I'm saying. And on the same time, why these auditors, they should identify the nodal officer or the TCWG members for their purpose, is because some accountability could be shared by them also, because in that process they will try to understand the strategy of the company rather than the strategy coming from this side. When they have to identify, they would try to first understand the strategy of the company, and then they can collaboratively decide it. This is my view, sir.
Perfect, sir. Yeah. I think, as I said, we will have maybe one separate session on TCWG also. Now, it's an important area. Of course, it is important to get that right also, because they are otherwise the auditor's role will not be effectively performed. So now coming back to this audit strategy document.
Just 1 minute. Just 1 minute. I think there's a question by Harsh Batra.
And Kawatra sir also, sir. There are two questions.
And both of them.
Yeah.
Harsh Batra is trying to say that as envisaged in UK and Singapore law, can the auditors have a private meeting with the TCWG? Because then there can be a more candid conversation with the audit committee, for that matter. It may be a good idea, very frankly, but the only thing is that if TCWG is the full board, then that serves no useful purpose. Then it has to be only independent directors. Very frankly, because the whole-time directors know what is happening. It is only the independent directors who don't know what is happening. So to that extent, that's the way I look at it. And whether those private meeting minutes can be maintained or not, again, that's going to be a major issue. So I leave it to your thought process. And of course, whatever Mr. Kawatra has to ask, he can ask.
Kawatra sir?
Yeah.
Sir, can you please unmute yourself?
Yeah.
Yes. Yeah.
No, my question was simple, as you're saying that a nodal officer can be can be designated. So can the board designate the managing director to be only the nodal officer? Very simple question, one line.
Managing director, if he is actually part of the TCWG, he can be. And obviously there will be, with the audit committee, there will always be, the other, the communication will be happening. But yes, he can be a nodal officer. Otherwise, see, what happens is, it is all the director, whether executive, he's in executive position or independent, the directors se koi hona chahiye. And it should not so happen that the executive fellow say that I don't know anything, or independent director also should not say that I don't know anything. And it will be his responsibility to actually communicate to the rest of all the directors.
Thank you, Kulkarni sir.
Yeah. So we have some 20 minutes time or so remaining. So I will try to take you through this remaining part of the document. Chopra sir.
Uh,
Yeah.
Sure, sir, please.
Yeah. So now in the discussion, etc., what you will also do is about the financial performance, etc. You will ask them, some of the important areas, whether it is standalone financials or consolidated financial statement. You also document that, which will help you actually in understanding when you do a, detailed or overall analytical review of financial performance. And also in this, at the end, you also document sort of what are the actions agreed, um, and what kind of information then the client's management will give you, and what management meetings they'll organize, etc. They will actually also you document and agree the actions on that. And then the next portion is about the overview of the business and industry environment, including laws and regulations. And this is a case of an automobile industry is this one. Before you document this, you read the automobile industry journal, and it's a listed entity. If there were investors calls, etc., those those are available on the entity's website. And plus also you had a discussion with the client management, and document, try to understand the operating environment of that entity. And one of the thing which has come out is here, um, one of their entity is NBFC, and it is subject to the regulations of the Reserve Bank of India, etc. And also the automobile industry, it is a capital intensive industry, and it's heavy dependence on supply chains for some of the raw materials, and batteries, semiconductors, etc. And of course, its business is also going to be influenced by the availability of finance to their consumers, etc. And plus, of course, the government policies also will be there, like whether you want to go for electronic vehicles. Nowadays that is becoming a big theme. And also about the safety norms, etc. It is also heavily driven by that government norms. And also try to understand here whether the industry, this particular entity, is domestic industry, or is it affected by the overseas foreign exchange, etc. And which kind of a market segment it is into. Automobile industry means it is, is it into a, two-wheelers, or is it into a three-wheelers, or, commercial vehicles, those kind of a things you try to understand. And also, document here what have been the significant market changes and volatility. And some of these things which we have documented here, these particular sections, if you are doing an audit of some other industry, pharmaceutical industry, you can use the same template, but the facts and the narratives will be different. Um, and because this entity is also actually overseas, global conglomerate, it is affected by the geopolitical risks which we have seen, like last 3 years, 4 years. There are Russia-Ukraine war, and then Iran. Many of these things have also must have affected the entities, imports and the exports, as well as if it is importing raw material, etc. The foreign currency impact will be there. And then next stage is also the macroeconomic conditions also might be important to just at a high level put the picture there. Like for example, in this particular case, this one of the macroeconomic condition is also about the automobile sales, which are heavily dependent on the Reserve Bank of India's lending policies, etc. In subsequent one of the areas where it is mentioned that the Reserve Bank, the prudential regulator bank, has actually tightened the norms on lending by NBFCs for vehicle financing, etc. So obviously it may have an impact on its sales. So that is the reason which we are documenting this. These are the factors, many of them which you document here will correlate them when you are looking at the financial performance, financial numbers that have been reported, and also in the risk management ROMM stage when we do it. And then the competitive environment, how the competition is there. It may also actually help you understand the going concern issues, viability of this entity, how that market competition is scenario is changing. And it will also help you understanding in this why the sales have prices have come down or prices are going up, and why the entity is going through this aggressive discount policy, etc. So, and the another section which you'll also have a look at here is the technological development in the manufacturing activities of this entity. Lot of this area, one of the area which is in the automobile industry is that emphasis on, because of this environmental consideration, emphasis on this electric vehicles, basically, shift from this normal petrol diesel vehicle to the electric vehicles. And obviously it may have an impact on the plant and machinery which the entity is having. Does it need to change its assembly lines? Does it need to change, invest heavily into a different kind of plant and machinery? So this will help you in doing that. And then also the comparison with peer group. What are their average margins? What this company's average margin, performance, etc. is there. So this is the factor you need to document here. And what is the market position of the entity also? Is it a leader in the market, or is it in a position to actually change the market dynamics because it is holding a very dominant position? Or it is also it's not so, but subject to it depends on sometimes entities also. Like if you see the telecommunication industry, because some dominant position person came with such a aggressive pricing policy, a couple of the mobile operators actually became bankrupt, or they are not even, some of them you are not able to survive. So is there such kind of a thing, and which may actually ask you, you will be looking at the going concern related issues. And then very another important area comes is about the compliance with laws and regulations. And when you're looking at this here, be specific that there are so many laws. In every country there are hundreds, thousands of laws. But tries to understand that some of the important laws relating to that entity's operations. Of course, something like our Income Tax Act or Goods Services Act, they will be relevant to most of the entities. In this particular case, which we have actually documented here also, in India, a new Income Tax Act was going to come in. What is its impact on the entities? Deferred tax assets, deferred tax liabilities, it may have an impact. And also on the another important change happened in this one, which you might be knowing. Last year in India, government slashed the GST rate on some of the vehicles. It may have a big impact on its sales. So it will help you understand, sales were supposed to go up because of this. They have not gone up. So what has happened? Is there a suppression of sales or something like that? Is there a fraud in that area? So like this is an area, and then there could be some ongoing litigations. And then on the environmental footprint, this automobile industry is going through a lot of across the globe challenges and heavy regulations, especially on the scrapping of the vehicles and extended producers responsibility rules, which most countries are putting that obligation. And this will impact your calculation of the provisions. If they are not complied with this law, then there is a likelihood of a penalty and fines on the company, and whether the provision is made. Ind AS 37 gets affected there. And Information Technology Act also, there are some new laws coming, like Digital Personal Data Protection Acts, etc. These entities also deal with, when they sell the vehicle, a lot of customer related information they ask, which we might be knowing. So how are they actually keeping that data integrity, etc. Plus, like earlier I mentioned, one of its subsidiaries is regulated by Reserve Bank of India in the financing business, and the RBI's strict norms on lending may affect that business. So then other industry specific risks which are there. This industry, which automobile industry faced this particular entity, say supply chain risk, because of this, the wars going on in Ukraine, Russia, and also in Iran, etc. Dependency on semiconductors and batteries, which are important raw materials or the components for the automobile, and then foreign exchange risk also. Because you see our INR and US dollar rate, INR has been depreciating heavily. So the imports, it is dependent on imports for many raw material. Its cost is going to go up. And what is its exposure? It is also, since it has overseas entities, operations where the production as well as sales, it is also exposed to the foreign exchange risk. And which are those currencies this particular entity is exposed to? Like this particular entity is exposed to euro and UAE dirhams, AED, because it has investments in those countries and export sale. So that is a factor which you keep in mind when which will help you understand the financial numbers. And
Vidhyadharji, there is a question. Vidhyadharji, there is a question by Ashish Arya.
Yeah.
That how do we identify what laws are applicable to a particular entity? To my mind, what answer he's trying to get it, should we ask the company secretary of the company to give the various laws that the company is exposed to? Or should it be the duty of the auditor independently also to get into the laws that the company can be exposed to? That's one question that Ashish has raised. And the other question has been raised by Yogesh Chopra ji. That is with regard to our earlier part of the discussions on TCWG. What he is trying to find out is, can the TCWG say that we will give you the opinion letter? They can take the opinion from the people who are operating, who are responsible for the operational matters, and can send those opinions later. I think that should not be a problem.
Yeah, that should not be the problem. You ask them and they have not given, so there will be again next meetings which you'll be having. You can take that. And
the opinions of the officials can be, presented in the reply, and the person, TCW person, can say that I have relied on these particular officials, because that is something more technical part, which the financial person may not understand. It might be, like you said, so many regulations can be in the country.
Yeah, you're right. That's possible. And the Chopra sir's first question is about the this one, the identifying laws regulation. Good part is definitely the company secretary's section. And many of these company secretaries also in companies, they are legal compliance officers. So they are expected to have a good set of laws and regulations and use that. And also, plus what you also do is, like when you look at the industry related journals, etc., when you read those and the investors call, etc., also when you look at it, these kind of a new laws, etc., if they have come in, and their likely impact, etc. Those you will also be a good source to actually come to know about. This is a new law which is coming, or some amendment is happening based on this likelihood is there. So the auditor can actually use these both sources and actually try to compile this.
Okay.
And sir, one more thing, can we ask the company secretary to incorporate some of the laws which we find, if we find that they are not incorporated in their list?
Yeah, you can.
You can. Always.
And if there is a reason, for example, he might come say that, that law is there, but for me that's not really is not applicable. Then he has to give you an explanation for that. and we should be satisfied that why that is not applicable. But you are very right. There is if we come, because auditors, if we come to know that there is some law which they have missed, we can always communicate to them.
And so, if I can just add here, this is
Yeah.
where two things. One, this is where even looking at the controls
Yeah.
helps. How are they really identifying? Because let's say, even if it's a company secretary, if it's not a very well qualified company secretary, etc. So, you also look at the process that the company has before you
Yeah.
really say, okay, I'm going to lean on their identified laws and regulation. And the second
Yeah.
is, and especially this is where the sector is very specific to regulations. And secondly is over a period, let's say if you, from an audit team perspective also, if you've got a person who's auditing other, like Mr. Kulkarni had referred to the industry. So if I'm, let's say, auditing, I have enough experience in a particular industry or sector, that will also help me in terms of knowledge I get across all the audits, in terms of laws and regulations. So both having an engagement team which understands the industry, and also when you're identifying, just don't take the list, look at the process that the company follows, be it the company secretary, to identify the laws and regulation.
Yeah. Perfect. And the next section is a very important section for us, which is close to our hearts also. That is the overall analytical review of financial performance.
Sorry, sir. I have also a small question on these laws and regulations. See, if you look at the standard, it is talking about see those laws which have a direct effect on the determination of material amounts.
Yeah.
So can we just suggest us few parameters based on which we can say that this parameter will determine the material amount or direct effect. These terms are very, I mean, at the moment, very open-ended kind of situation.
I would suggest, for that materiality, normal what we do as materiality, overall materiality, performance materiality, use that materiality, this one only, to try to understand the laws ka uska impact. Does it beyond that, or is it below that? So that can be one criteria you can actually look at it.
No. The point is first determining which law is have a direct effect, and the second is if there is any default or contravention, then looking at the impact of the amount. So that part is okay. Impact we can, materiality aspect we can see, but how to determine that which law has a direct effect? I mean, making a distinction between, for example, there are, let's say, 100 laws which are applicable. What criteria should we make to take a decision that these are, out of this 100, we must see these 525. That type of criteria. What should be that criteria?
So that should be based on what the scope of that law is, and which of the items of your financial numbers or others it affects. Based on that, and then discussion with the company's legal and compliance officers. So that should be the qualitative criteria we should use for finding out, first to identify that should I go and look more detail into compliance with this law, or I should leave it. So this is my kind of sort of a suggestion, because yes, as you said, if we try to apply that quantitative basis, but if we have complied with everything and there is nothing much, it becomes a difficult way whether to say that it's relevant or not. But looking at the scope of the law and the operations of the entity, based on that, you actually try to look at it.
So, sir, considering these ITE Act and DPDP coming into force, so will those be considered as material act, which we should consider?
Again, you look into your operations. Are you dealing with this, the lot of data, etc., of the third parties, etc., or are you using that data? If you are, then yes, you consider that as an act to actually look at compliance with that act.
Got it.
Yeah. So linking that to the entity's business, nature of business is very important. Sir Chopra sir, now we are coming close to sort of a 7 o'clock time, which we had said. But a lot of the areas are remaining in this section as well as that ROMM. What would be your suggestion? How do we go about taking the remaining sessions?
Then my suggestion will be that since a lot of queries has arisen,
Yeah.
it's better to answer those queries rather than
Yeah.
So we can take some queries at this stage, and maybe we'll request you to come again and then take it forward.
Yeah.
But at this stage, whatever queries are there, if because you have touched upon some of the very important areas,
Yeah.
and where there are some gray parts are there. So how to really deal with that? I think
Okay.
if we can raise certain points there. Otherwise, you can continue also. There's no problem.
So then, in the chat box, should we look at any queries, or if there are?
Sir, I have removed the restriction of muting now. So in any case, any participant they can raise a hand, they can ask a question.
Sorry, let me go first. I just wanted to add to the question that was raised on identification of laws and regulation. I thought that was a very interesting one. While it's very difficult to give an entire list, but I just wanted to take one example to illustrate the difference. Of course, it will depend on the operations. And you obviously look at the sensitivity of the non-compliance to the financial reporting. So let's say if I'm a company wherein there is a law which says, you've got to have so many, whatever, street lights, etc. This should be well lit. There should be this kind of a bulb, which is, that environment friendly, etc. There could be these requirements. I mean, presuming, let's say if I'm in a sector wherein this could lead to penalty, but not very significant one, I would not frankly put this as one of those laws and regulation which can be relevant to financial reporting. But let's say now these days you've got those laws and regulation coming that, if at the end of the useful life you've got to, for example, in the auto sector, in let's say mobiles, etc. Now laws have come in that at the end of the life, the company has a responsibility to ensure that these are disposed of in an environment friendly manner, and there the impact can be huge. So I think the second one is what I would target. The first one, yes, it's a laws and regulation to say it should have so many lights, it should be from here and there or whatever, it should be this bulb, that bulb. But frankly, that may not be something that I would look at compliance with, as an auditor. So that's the kind of difference I would make, in terms of identifying. I don't know whether that example helps, but some of these things you will apply to identify, is this a law and regulation that I need to look at for the purpose of the audit?
Archana ji, in this case, virtually you are scanning all the laws which are applicable. And then
No, I mean, I'm just saying when I would look at the process for identifying, I would focus on those type rather than the first type,
So the answer which is coming from you is that you have to scan each and every law which is applicable, and after that, then you can, based on its applicability and its severity of penalties which is arising out of it, then you can decide which one to really go further deep into.
Correct. And one of the first questions should be also from the company's point of view, how do they have that compliance officer structure and how do they identify it? What control do they have to identify which are the laws they are going to have impact and how do they comply with that? That should also be one good starting point, and then this next step of correlating that how much more related to its operations and impact it's likely to have can be considered.
Yes, sir. I think that aspect related to the control, that what controls the management is having for ensuring the compliance of all of these acts which are applicable on the company is going to be a very important one, because as an auditor, it's going to be impractical to see and evaluate each and every law. So on the items which are not that much related to the financial impact, management controls evaluation is going to be of more importance.
Yeah.
Thank you, sir.
Right. So any other questions?
Sir, one question in this regard is, I put my comment also there.
Yeah.
That ignorance of law is not an excuse of innocence, right?
Yeah.
But where can somebody find the relevant laws posted with the latest text of laws, regulations, implementation guidelines, so that they can ascertain that they have taken care of all the laws?
Yeah. So in a country like ours, it is a little bit of a challenge also. So otherwise, that PRS or some portal where there are laws which are all listed down, one can look at it. But the most important thing, my suggestion is that you look at from a control point of view within the company, how are they addressing that? That's more important. Otherwise, in some countries like US, there is a the registration itself annually gets updated and gets published. Like federal legislation and state-wise, they keep having a full list. These are the laws and regulations which are applicable, things like that. And India probably I don't know whether we have that other than that PRS their system. But the starting point we should look at is the company's point of view. What controls do you have first to ensure compliance various laws and regulations? That should be our starting point. Kapilji, unmute yourself. You wanted to say? Yeah.
No, nothing, sir. Thank you very much. My point was same, that it's a catch-22 situation.
Yeah.
How do you know that all the laws are identified, all the relevant laws are identified? So
see, that's why it's like this. See, there will be some experts there. Okay. Like for example, many times auditor we are allowed to depend on some experts like valuation expert, and where the actuary we take into account this one. Like similarly, from the company's point of view, we'll have to, like legal and compliance officer. We are actually, I think it's a fair point on the system, on the auditor, that he can take starting point as the company's officers and ask them how does it identify that. And if he is also, some cases you might find that they also do not have very good controls and systems like that. Then yes, that is a point which would actually should advise management that they should implement some control. But apart from that, one should actually try to look at sort of taking some help of lawyers or advocates, etc., and looking at the some of the entities past expenses, etc., where they have given say for example lawyers fees, etc., for which are the various non-compliances or some disputes or something which they have given. That could also be one good source for us actually to actually say that yes, we have done our job to the best of our professional requirements. So this way one should go about doing that.
But in the normal audit firms, sir, people have to take care of the cost they are incurring on this. No client is willing to pay that kind of extra cost to us. That is another issue. Anyway, thank you.
Kapilji, you should not be taking too much of pressure on your birthday. Happy birthday.
Thank you,
I think we are celebrating your birthday today with this heavy talk.
Kapilji, happy birthday to you.
Thank you, sir. Thank you very much. Thanks to
And
all.
he's joining from Bahrain.
Happy birthday, Kapil sir.
Vidhyadhar, I would like to inform you that your talk has been joined from Chennai, Mumbai, Delhi, and of course Bahrain also, and maybe some other people also are there.
Yeah.
And some of the very senior people joined your talk today, very frankly,
Nice.
besides
Yeah.
GSA Associates.
Yeah.
That has been the hallmark of the talk.
Yeah.
It's still going on or it's over?
Sir, what I suggest is, because this remaining for this strategy document, another 30 minutes, because there are 3-4 important sessions are there. And then ROMM will take about 1 hour. So we'll keep this another day, 1.5 hour session for that. And then the another one session which I had said, after all we talk, we do strategy, ROMM, etc. Ultimately, how do we actually use this in your audit process? That is the nature and extent of audit procedure. That will be another session where we'll cover the statistical sampling and that. So we'll have 2 more sessions depending on your availability and your this one. You can plan it, and it was good that a lot of this the interactions were there. That is important. I didn't want to actually make it like at very this one हम लोग यही बात करेंगे आज इसको ये होगा, because it is not like our statutory requirement or something. So I am glad that many of these points which the burning issues of the day also, like TCWG, also have got discussed. But for these topics which I said, because I'll be actually main idea is to how to document this also, and to end of the result is all this planning and all should not just remain a theory on some my work paper. How do you actually apply that in your sample sizes, which you alluded, sir, in the beginning, that the आपके जमाने में 3 महीने का वो करो, watching करो, ये करो and all. But now how do you actually build in this? So that will be one session and 1.5 hour session. And before that, ROMM, risk of material use statement, which you also said that how do you actually rate them into moderate, low, etc. And how do you identify control? These 2 sessions, you depending on your this one, schedule this kind of a call. And I am very willing to participate this any point of a time.
Certainly undertake 6th September onwards, probably will take it now.
Yeah.
Okay. Yes, Anilji, you can sum up today's session, please. Conclude.
Yeah, thank you, sir. Mr. Kulkarni, thank you very much. In fact, the way this webinar has gone, the kind of discussion has happened, it has really made this webinar a very great success. See, you wanted to discuss today audit documentation and risk of material misstatement, but we never allowed you to go beyond audit strategy itself. So really, and then see, it was a really good discussion, and some of the finer points which we discussed are really very, I would say, practical issues. See, we had a detailed discussion on how to plan meeting with the TCWG and how to actually determine who all are TCWG and the nodal officer. That aspect was discussed in detail. And then laws and regulation is another point where there is a lot of I would say ambiguity, which you have clarified. And with regard to the foreign component auditor, also you have given us detailed insight how the financial statement from them are required to be received after they have been prepared under Ind AS rather than under the accounting standard which are applicable in that particular country where this foreign component is located. So these were some of the very good points, and we have taken note of it. And once again, thank you very much for these insightful inputs which you have given to all the professionals who are carrying on this audit exercises. And thanks to all the colleagues who have raised the points and made this webinar really worth participating and worth listening. And I'm very sure that in the forthcoming webinars, we would have the same kind of interaction. We should be ready, and we should be having a different strategy next time, how to complete your subject, and in spite of so much debate.
Yes.
Thank you very much, and thanks to all who joined today. And it was, for me also, it was a very enlightening session. Thank you very much.
Thank you, Vidhyadharji. Of course,
Thank
after
you. Thank
Anshul
you.
has said it, I don't need to say it. But as it is Kapil's birthday, I think one will like to end up on a wishing note. A very, very happy birthday. Celebrate him, Harin, but send the cake to us also. And he said we have
Happy
to
birthday,
participate
Kapil ji.
कपिल जी का कुछ पता
in
नहीं कि
other
डिजिटल
parts of the
केक
country.
भेज दें.
Happy birthday, Kapil. Happy birthday, Kapil ji.
By the
Okay,
time
God
it
bless
reaches
you.
you,
Thank you all. Thank you all.
by the time it reaches
And,
you, no sir, by the time it reaches you through state of Hormuz, it may be stale.
Kapil sir, we will not like to miss your shairi. If you can give us one note for us, sir. We love your shairi.
Great.
Good demand.
It's a really challenging task to find some suitable shairi on this occasion. But if you give me 1 minute, I can find.
ऐसा कह दो ना तुम जियो हजारों साल. हम ही कह देते.
ऐसा वो मेरी शायरी मांग रहे हैं तो फिर मुश्किल.
So, Vidhyadhar sir, we share a very nice informal group also by the name of Social Pillars. And there, sir, we have a good interaction on the non-professional discussions. So, Kapil sir helps us, navigate that group, and so that we don't get into any, other kind of discussions. So, he keeps good tab on us. So, that's why I took the liberty.
Kapil, hold on 2 minutes.
Yeah.
One thing I would like to add, recently I have made a group because I was in Nigeria and Ghana working with the Pepsi group, and I'm back to India. So I have made a group of those people who have worked in Nigeria and Ghana, and there also we have included, like you said, the non-financial aspects. And now we are sharing the vision. So let me see. We'll get in touch with you and take your advantage of your experience, and from Kapilji also.
Thank you, sir.
Thank you.
Thank you.
Thank you, everyone.
Thank you.
सर 1 मिनट हो गया, आपको दे दिया 1 मिनट.
बिल्कुल बिल्कुल, मैं अभी आपको शायरी सुना देता हूँ. मैं बेसिकली एक जो जनरेशनल गैप होता है इसके ऊपर मैं सुनाता हूँ आपको. ये छोटी सी,
वो कहते हैं ना कि 2 लाइनें.
हाँ, 2 लाइन, ज्यादा लंबी नहीं है. कि रसालों में छपे, हाँ सर, रसालों में छपे, यानी रसाले माने पत्रिकाएं जो होती हैं उसको रसाले बोलते हैं, मैगजीन्स. रसालों में छपे तब ताजा अफसानों की तरह, पुराना हो गया मैं गुजरे जमानों की तरह. तो एक तरीके से हम जनरेशनल गैप बता रहे हैं, मैं बनाने की कोशिश कर रहा हूँ बुजुर्गों की तरफ से जवानों के लिए. कि रसालों में छपे तब ताजा फसानों की तरह, पुराना हो गया मैं गुजरे जमानों की तरह. मेरे हाथों में खेले अब है सिखाते मुझको, कि रहे दुनिया में हम कैसे सयानों की तरह.
सर बड़ा पेसिमिस्टिक नोट पे खत्म किया आपने, तो मजा.
मैं कहता हूँ
सयानों की जरूरत फिर भी रहेगी.
अरे सर, जितने चेंजेस हो रहे हैं नफरा के हैं, किसी के भी सारे मैनेज हो जाएंगे, डोंट वरी.
चलिए सर,
बड़े अच्छी तरह से उसे मैनेज करेंगे, सारा डॉक्यूमेंटेशन वगैरह सब करेंगे. नथिंग टू हैव दिस गैप्स एंड ऑल दैट. नीदर जनरेशन नॉर एनी अदर गैप्स.
थैंक यू सर.
Okay.
Thank
you everybody. Thank you so much.
Thank you everyone.
Thank you.
Happy birthday,
Kapil ji. Thank you ji. Thank you everyone.
With everybody's permission, I am closing the meeting.
Thank you.
Thank you so much.
Thanks all. Thanks, Kriti.
Thank you so much.
Thank you.